What is up, guys? Welcome to another episode of the Sunday Sermon. Welcome. Hope you're having an amazing start to your Sunday thus far. Hope you had an amazing weekend as well. And I just hope you're having an amazing day, an amazing life. But welcome all our new subscribers. Sunday Sermon is a day where we get together and get ahead and get a plan for the market and understand everything that can go out from a macro sense of news, catalyst, FOMC, Fed speakers, etc. Into levels, technical analysis in the market, specifically with the S&P 500. So we use Sundays to get ahead. If you're waiting until Monday to get ahead, you are officially behind. Sunday is the day where winners get ahead. All right, guys. So welcome. If you're new, hit the like and subscribe button, guys. It's completely free. I want to bring this to y'all to help anyone everyone out there that is trading, just to give a better understanding of how the market works, right? All right. Anyway, for all those that have stuck with me, what's up, you motherfuckers? Anyway, look, back above the 200-day moving average, 405. Held it last week, or excuse me, 403. See it here, this weirdly colored blue dotted line. Okay. Don't worry about all the lines on my chart, guys. They all make sense when we break it down. I promise. I know it looks like a complete cluster. Fuck. Okay. Hit this huge trend line here, though, off the annual highs, right? See, we've touched it 1, 2, 3, now 4 times here. What does that mean for next week? I don't know what it means for next week. Let's look to see if there's anything going on this week that can completely fuck us or take us to new highs. I don't know. What do we got going on? Economic calendar, guys. Come to Market Watch. If you can see it all on one screen and not have to scroll, it's a light week. Okay. PMI Monday, pretty much trade deficit Tuesday. Not really anything going on here Wednesday. I mean, consumer credit level change, always important to see, guys. Our economy is obviously run by all these huge companies, but those companies can't run without who? Us, the consumer, right? The dollars have to come out of our pocket and into their pocket, right? And money makes the world go around. Okay. So we'll want to see what the consumer credit is. It'll just give an insight into the, I guess you can call it the health of us consumers. Okay. Thursday is what you want to pay attention. Excuse me. Morning coffee still going down. Thursday is what you want to pay attention to. Initial jobless claim, continuing jobless claims. Okay. Why do we want to know what's going on in the jobs market? Well, the Fed keeps on tightening, raising rates. Typically, that should result in a cooling off, quote unquote, of the labor market, or for unemployment to go up, because when money gets expensive to borrow and companies rely on the borrowing of money to operate from a day-to-day standpoint, okay, it becomes more expensive for them to operate. What's the first thing they start to cut? The most expensive thing is headcount. They cut that first, typically. Okay, typically, right? Then on to Friday, producer price index. Okay, PPI. So CPI is the consumer side, demand side. PPI is the producer side, the service side, the supply side. It's always good to get a gauge of what's going on. Is it more expensive for them to operate, for the supply, for the service? Is it going to have to pass that cost on to the consumer? Okay, it's understand the balance. Okay, and then always good to know the University of Michigan Consumer Sentiment Index and the 5-year inflation expectation, guys. Those come out right 30 minutes into market open. Always get some fuckery going on. So we know in the Wolves of Wealth Discord community not to be very heavy in a position on short dated there, right? Want to wait for that to play out. But that's really it for this week, guys. Super light week, because all the bullshit that goes on is all next week. Okay, this week right here, the 12th to the 16th. Okay, I believe it's CPI and FOMC is 13 and 14. They don't have it updated here yet, but I just want to show you here. So this is also what OPEX week. Third Friday of every month is OPEX week. So you've got OPEX, right? And I believe you also have the December contracts coming up. So it might be triple witching. I'd have to double check. I know there's futures contracts. It's a monthly and it's a quarterly. I know that's triple. I don't know if it's quadruple witching. So it's going to get real funky in here. Okay, but 13th is CPI. Okay, 14th FOMC. So, right, Fed Chair Powell talked last Thursday about, or Friday or whatever the day was, basically about being dovish in the sense that, he doesn't want to raise rates as much in December. He kind of hinted at that. Maybe not a 0.75, might be a little bit lower. Market rallied off that. He didn't say they pivoted. He didn't say they weren't going to raise rates. He just said it might be a smaller rate raise, but they're all data dependent. So does that Tuesday number, right, that comes out here on the 13th, is that Going to play a huge part in what they say at the second day of the FOMC meeting. Very possible. Okay, very possible. So we want to pay attention there. And you see, none of these knuckleheads are talking all week long. I believe it's a blackout week for going into the FOMC meeting. I could be wrong, but they typically don't talk that much. But always one of those knuckleheads want to say something stupid because they think they're popular. I don't know. Anyway, on to the charts. Okay, on to the charts. Now let's just take a quick, I want to zoom out first. Okay. Let's go to the monthly. Okay. Let's go to the monthly. What do we have here on the monthly? Okay. Well, we see here, what just happened? Oh, did I click the chart off? Okay. If we see here on the monthly, you always want to zoom out. What are we doing? Okay. Well, the monthly is obviously at this huge downtrend line. Very important. Okay. We just started the month here, right? Just started the month. What do we see, right, as a pretty big level? What'd you say? You've got all these wicks down touching, okay, and then you have all the tops of these candles, and the bodies of these candles are all in here where, right? This 13, 4, 10, 11, 12, 13. This seems like a big area of confluence in here, okay? Huge area in here. So is this area going to be pretty difficult to maybe get through? I would think so. There's a lot going on in here, right? Now, I do want to say this. If we do get through this 411 area, we will more than likely go right back to 420. You can see here the monthly 20, okay, is at 423. Okay, it's got to know that that number is up there. Now take it down to the weekly here. Okay. Now the weekly chart says what? Right at this trend line, perfect. And what do we have down here? The weekly 50 MA. It also was rejected here at the beginning of the bear market rally. Or I'm sorry, at the end, I'm sorry, at the beginning of the bear market. But it rejected on its way down. Then it rejected here again. Okay, and now we're right back here, right? So we have this trend line. Now, do we go up and touch this at 412? Remember I said anywhere from 411 to 413 on the monthly chart was a huge area. Now we've got this weekly 50 MA is a purple dotted line here at 412. And then voila, 100-day moving average on the weekly is at what? 418. So you can see that there's a lot of now pretty significant higher time frame MAs up at the top. Okay, and notice here it looks very, very squished. You have the 5 on the weekly at 396. You have the 20 MA is the green dotted line at 392. You've got this is the 8 EMA is yellow, 21 EMA is red. Okay, and those are your EMAs. They're crossing over there. So it's something you want to know. Okay, and then take it down to the daily, right? Now the daily says 200 MA was right here at 403. And we got through that and held. Now we've held above it. Now, what's the plan for this week? Well, there's not a ton of economic data or any huge catalysts that are coming out from on the economic calendar that I would think would explode us up or take us lower. So what I believe could happen now, knowing next week is such a huge week, okay, and the market knows it's a huge week, that everybody's waiting for what Powell's going to say, what the Fed is going to do. You don't fight the Fed. So what might happen here? Well, we've been talking about it for a while. This was a stage 1 right here, right? Stage 1, we went to a stage 2 breakout. Now, are we in a stage 3 distribution phase here, right? Where we might just bounce around a little bit, okay, while people are exiting. And then do we get a possible next leg down? That's what's going to happen if we do not get through. Basically, we stay under 411, 412 right here, which is the top of this candle. Okay, if we stay under there, and what else is that? Look how big that level was here. Take it back to May 27th over here. See how huge this was? Okay, see how huge that was? See how we're basically right underneath it here now, underneath this tight range we were in before we dropped out of the sky. Okay, see that? So this is all, like I said, area of confluence, right? Shout out Tia Bells, confluence. There's an area of confluence in here. This 408 to I'd say about 412. Okay, is huge area in here. Okay. Last time we got above it, we came right below it again. Okay. So know that, right? Know that. I think we possibly could have a chopping week going on. I would think it would be safe to short 410 to 412. Okay. And why 412? Okay. Well, I just said it. What's here at 412? 50-day moving average on the weekly. All righty. What's here at 412 on the daily chart, Chris? Well, right here, the top of this candle, where before we literally gapped down, okay, before we gapped down 11 points. So do you think that that's a pretty significant level? I would like to think so, right? I'd like to think so. I think it'd be safe to short 410, which is basically the weekly high of last week, to 412. What I believe could happen is a very nice double top this week, or even a possible fake out. You know, we talk about the fake outs. Dip your head above, get everybody to go long up here to possible 412 just to rip us back down, back into this channel. Okay. This new channel we're in now is 403. We're holding 403. We long 403. Why do we long 403? Well, we held it on Friday, and it's the 200-day moving average. So you want to long this 403 area and short anywhere from 410 to 412. Now, I know that's a wide range up top. So what you need to do is be a reactor at that level, not a predictor. You don't just close your eyes and short at 410 and hope the best works out for you. That's not how it goes. You give your price, you understand your plan. The plan is to short 410 to 412. Well, if we get to 409.99 and there's a huge hammer reversal candle, do you short it? Of course you do, but you go, oh, Chris, it wasn't at 410 exactly. I couldn't short it. You said you had to. Okay, you're a reactor. You have to react. What if we fucking gap up above 410 and then we come to a screeching halt at 412? You're like, well, you said short 410. I shorted the open at 410. Well, no, I said you have to react at 410 to 412. There's going to be a short in there. Okay. So you have to react. So guys, this is the importance. We had it on the last masterclass of understanding how to identify where the reversal pattern or setup is coming at your level. Okay, so go back and watch the masterclass in the Wolfsville community exclusive to them. I went over it for an hour. We have another one coming out this week on a specialty, very in-depth of how to with options, understanding the Greeks, how they move. Okay. And then a few other things we're implementing. Justin and I will be running that this week. TBD on time and date. It wants to be Wednesday, I think, though. Don't know the time yet. We'll get that to you guys as soon as possible. If you guys want to catch that, guys, go ahead and join the Wolfsville community. Hit the link in the description to join. Okay. Selfless plug, but we're awesome. All right. We're awesome. If anyone that's in the Wolfsville community that does watch these videos, you can comment below and let everyone else know we're welcome or we're awesome. That would be more than welcomed. And I'd say thank you. Okay, so plan for this week, guys. Very simple. 410 to 412. I'm looking for a fake out and a short there. If you're trading ES, looking at ES, about 4140s would be a great short. 4140s is about a great short. I think 4110 or 4115 has been our high last week, or maybe it was 4105. I'd have to go double check. We're up in that area, though. There's a short. You want a long 403 and bid 4025 on ES, okay, as long as that holds. Okay. The trend is your trend until it's no longer the trend. Okay. The trend is your trend until you are until it's no longer the trend. The trend is your friend until it's no longer the trend. Okay. So what is that? Well, you got a short when you get up here to 4.8 to 4.10 last week, right? And you got a long when you get down here to 4.03. Okay. Very simple. Now, if 403 breaks, you want to look at 400 psych level. Okay. And then 396 below there, 396.95 here. Okay, underneath there, you'll look at 393. That was a huge bid level. Look how many times we got into this demand zone. I would definitely long that level again, but more confidence would definitely be this 390. I think that would definitely be a long. I think this week we could also see a possible fake breakdown as well. Maybe come back to this 400, maybe 396 again to maybe just try to catch people off sides. Guys, if they know we're going to wait for the data to come out next week, that's a lot of trading days till the data comes out. The market's going to try to balance itself, quote unquote, right? It'll want to fill, it want to fill all these, unfinished orders or whatever they call that. Okay. It's just playing levels. Look, we got down here to 393, 393 comes, we long it. Okay. The 5 MA on the daily and the 80 MA on the day. Okay. You long that on Friday open. Okay. You just saw that. That was level. This was also previous resistance turned into support. Now we know it's support. Long 403. Very simple. Okay. Very simple. Okay, above, in case we want to get above, you got to be ready for it. That 412, we're going to zippity doop bop all the way up, fair value gap to 419. Remember what we said on the daily, weekly was what? What was up here at 419? Oh, 100-day moving average. Go figure. 418.93, 7 cents off. Fucking shoot me. I'm sorry. Okay. Now, that's the plan this week, guys. It's very simple. Not a lot going on the economic calendar, not a lot of Fed speakers, no earnings, none of that. It's going to be a week of balancing or range trading, consolidation, whatever you want to call it, likely into FOMC. Now, if we get Ripper Magoo, how are you? I would be more skeptical of a breakout, okay, than having a reject. So over 412, 418.19, definitely. Okay, but I look for the reject here first, and I don't want a long 403, and I don't want a long 393. I'm sorry, long 396 and long 393 and long 390. Okay, until 390 is really lost. I think when 390 is lost, that's when the bear market rally is over. Okay, the bear market rally is over. And until 432 is taken out, because that would create a higher high now, right? These are all lower highs. That would create a higher high, unless that's taken out right here, right? Unless that's taken out, that's also going to be the bear market rally, or the bear market would be over. From a technical standpoint, that's how I believe. Okay, so unless we lose 390, okay, trend is up. Now we are at a huge trend line resistance down. We're at huge MAs. Okay, just know that. Just know that. All right, guys. Other than that, I hope you enjoyed the video. I hope you enjoy the rest of your day. Get ahead, get your levels right, and don't do anything fucking stupid. I'll see you bright and early. Peace.